Okay, hey everyone, welcome back to the 4-Star Podcast. Today we have our market commentary podcast where we're going to talk about what's going on in the economy. And boy, a lot of really interesting things are going on right now. So we got a lot to talk about. I'm Brian Castle, your host. My co-host is Mr. Christopher Reardon. Chris is with me today. Hello, Chris.
Good afternoon, everyone. Glad to be here.
For those of you who are new here, Chris, of course, is the 4-Star Director of Development. He runs a big chunk of the firm and portfolios, reports, marketing, anything systems. He is the brains of the outfit in many ways. So we're proud to have Chris with me here as co-host again. So again, Chris, welcome.
Thank you.
And I'm your founder and CEO of 4-Star Wealth, Chief Investment Officer, also Chartered Advisor of Philanthropy and National Trustee Foundation of the Boy Scouts. So we're very involved in nonprofits as well. I am the husband to the amazing Tripty and father to Evan and Quinn. And we are ready to have another podcast today, Chris. So let's do it. So the markets be crazy, right? So what's going on out there in the different asset classes, Chris, in the market today?
Yeah, so we've seen a little bit more of a shakeup in the bottom three asset classes. The top three asset classes, for the most part, have remained constant or unchanged. But commodities still holds our number one position. It's at 324 tally points, unchanged from the last podcast. Domestic equities holds the number two position at 271, unchanged as well. And then rounding out the top three, we have international equities at 191. Unchanged in third position. So the top three, little move, obviously no movement there, I should say. But then the bottom three, we've definitely had some movement. Fixed income still holds the number four position, but it continues to weaken. It lost 4 points from the last podcast, and it's at 124 now. So we do see that starting to move down. Cash, on the other side of it, gained 2 points in the fifth position. It's at 112. So we could see cash overtake fixed income if these trends continue, but we'll just have to kind of continue and wait and see there. And then currencies in sixth position, gained 3 points, and it's still sitting at that 70 mark. It's been kind of jumping back and forth, gaining a little bit, losing off and on every other week, really, or every couple of weeks. So it's been pretty consistent at that level. So it's really been not much movement in the top three, and pretty much all that movement's been in the bottom three asset classes over the last couple of weeks.
Chris, I don't remember a time in the last 6 years we've been doing the podcast and tracking those numbers when the top three are all unchanged from one period to the next. I don't remember a time like that.
Yeah, and I mean, I think you would expect to see at least a little bit of change, especially because we've had the markets have been very volatile, both upside and downside. But, I think it's almost everything's kind of netting out, if you will, and we've just seen almost a stalemate in those top three asset classes.
Yeah, but yet under the hood, we're seeing a lot of activity. And of course, we saw the worst quarter in 2 years in the stock market in the first quarter, but it was actually a lot worse in the mid-March. So it rallied to be still the worst quarter in 2 years. So it would have been a really, really bad quarter if it ended on March 15th. But, we saw technology stocks get slaughtered. We saw a lot of really dysfunctional things in the stock market in the first quarter. When the tech stocks started to rally, now they're selling off again. So it's getting a little sloppy, a little bit messy. But the bond market, which is usually what people consider to be their safe bucket investment, is down 7% for the year. We did a interview that is available in podcast that just came out. Mike Terwillinger of BC Partners talked all about the bond market and a credit expert. And that's also the videos on TikTok, LinkedIn, and Twitter that you can see little video clips of Mike talking about the bond market. So really messy, Chris. It's a really messy time.
Yeah, no, I mean, it's definitely been the market now, especially really year to date, and especially with the rate rise environment we're in, it's a much different environment than we've seen the last couple years. And even kind of coming out of the pandemic with the huge pop we saw there, and then kind of 2018, 2019, I would say the closest we've really seen from a volatility perspective to this would be Yeah, I'd say, and it's still, I would say, doesn't compare, but 2018 Q4, we saw a big pullback, and a lot of that was due to the Fed was raising interest rates at that point again as well. But we're in just a different world than we were even 4 or 5 months ago.
Yeah. Well, and then today, the 10-year Treasury bond hits 2.8% and different side percentages of that, but 2.8, 2.9. And that's the highest since 2018. So that at that time, it was on the down low, but now it's moving back up. So, we're kind of normalizing interest rates, but even James Bullard, who's the St. Louis Fed president, says we may see a 75 basis point increase. They're very worried about inflation, and it's not getting better. And in fact, it's getting slightly worse. So, we'll talk about that in our economic section. But also, we saw the biggest move in housing start since 2006, too. So real estate's moving up, same as the 1970s when real estate prices moved up in a tough economy in the 1970s. Same thing's happening now. But Chris, you had some other economic numbers that you were looking at too.
Yeah. I mean, I think kind of what you alluded to, Ryan, the main event, if you will, is inflation. I mean, inflation has really been kind of the biggest hot topic on media and just in general with the markets. And the numbers came in for March, and it was at 8.5%, which was a decade high number there. It's the fastest annual rate since December, or 4-decade high, I should say, since 1981 December. That's up from 7.9% the 7.9% annual rate in February. So it has increased still. So we are still seeing acceleration in inflation. But I think the underlying aspects of it, the core price index, and that excludes food and energy, which tend to be more volatile, that rose at 6.5%. So still very high. I mean, it's not like this is all energy or gas prices. It's pretty broad. That rose at 6.5% in year over year in March. That was the largest 12-month rise since August of 1982. So we're really going back to the 80s to get the last time we were at these numbers. But I think the one underlying bright spot is the month over month change in that core index. It rose, but it only rose slightly. It rose 0.3% month over month. So that's from February to March. And that's the slowest pace in the past 6 months of month over month increases. And most of that was also due to we're starting to see declines in used vehicle prices. They decreased 3.8%. So we're starting to see some cracks in some of the underlying areas that have, over the last year and a half, driven this up and one of the main drivers. So we could potentially see that top. It could have that 8.5% highlight number could be the top, but we don't know. But there is some underlying data that's saying potentially we could be at the top in March.
So if interest going higher to ward off the inflation, what does one do? So obviously the bond market's getting hurt because most bonds they call them fixed income, but there are bonds that are not fixed. They're floating rate bonds. So Forestar has always made a big effort to be in floating rate bonds at various times. And we have a portfolio that is pure floating rate bonds. It's been unpopular for the last couple of years, but now it looks like it's popular again. And then our rising bond model also includes some floating rate bonds now also. So there are things that an investor can do or look at corporate credit. So there are things to be done in an environment like this. So Chris, that's kind of, our posture on that, right?
Yeah. And I think, the other side of it, when you see a rising rate environment to fend off this inflation, like Brian said, I think at this point, I think they're baking in a 50 basis point or a 0.5% rate hike coming at the next Fed meeting. You would expect the housing market to slow down, but we really haven't seen it slow yet. Housing starts are rose to an annual rate of 1.79 million, which beat estimates, which were 1.75 million. And so that's housing starts is essentially new construction. So they're building a lot of homes, but there still is a significant supply and demand issue in housing. And it's actually, funny enough, only getting exacerbated by this rate hike, because if you own a home now, even if it's worth 100% more than what you paid, do you want to sell it if you're locked in at a 3.3% or 2.5% interest rate and then go buy a much more expensive home and have to pay 5-6% in interest rates on it. So you have a lot more of owners who are much more reluctant to sell unless they have to. So that's a decrease in the supply. Demand is still there. So you have housing prices that have continued to rise and probably will continue to rise until this will choke off some of that, but until we have some of that supply and demand issue disparity kind of close, and that will happen. It may take a year, it might take 2 years, maybe it'll take less, but there will come a time, especially with all these housing starts, that a bunch of new houses will have been built, the market will have a ton of supply, and things will start to kind of cool off and ease down again.
Yes, and all real estate is local, so it's all about what's being purchased in that local market. Right now, there's enormous number of apartments, and certain markets have been built all through the pandemic. So some markets are seeing softness in rents because there's so many apartments, but still the regular housing starts are strong. I'm going to introduce a new word to the 4-Star podcast that I remember very, very well, and some of the old timers might remember this word, and it's a word called disinflation. So it's not, inflation is when prices are going up. We know that painfully right now. And anyone who was around in the 70s remembers that well. And then deflation was when prices are going negative. And that's a really bad scenario where prices are going negative and then the whole economy collapses if we have deflation. But if inflation is high and going lower but still positive, that's an environment we call disinflation. And I remember back in the early 80s, Chris, before you were even around, if I believe I'm right on that, the disinflation was hopping because inflation had been so high and we were going down to a lower inflation rate. Inflation at the base level, maybe 1 to 2%, is kind of an important normal part of an economy. Maybe a 2% inflation is an interesting model. Certainly the Fed target. But deflation doesn't work, but high inflation also doesn't work. So as we're going from high inflation to normalized kind of 2% inflation, they call that environment disinflation. So that's kind of what we're seeing right now. Although in the short run it went up, but certain commodities like cars and other things are going down. But foodstuffs are up and oil is still up. We're paying $5 a gallon. $7 a gallon for gas and all that kind of crazy stuff. So some of that stuff should ease, though, by the fall, we think. But it's just a matter of time. So, buddy, pray for disinflation, because that's getting back to a normalized level, and then we can go back to a normal economy, which I think we will probably later this year, unless, of course, we fall into a recession, which is entirely possible, and many economists are calling for that, but then that would probably be short-lived and we'd go back to a normal growth economy again. So anyway, Chris, what else do we see out there?
Yep. Yeah, so a couple of other numbers that we got. Retail and restaurant spending rose by 0.5% in March over February. That is down from the 0.8% increase we saw in February from January. The biggest things to highlight of that number, gasoline sales jumped 8.9%. So huge contributing factor to that spending increase was really gas sales. And on the flip side of that, online retailers saw a 6.4% drop month over month. So we're already starting to see that the like Brian said, $5 to $7 gas price, dollar per gallon gas prices at the pump eat into people's pockets. And what are they doing? They're spending more on gas and they're pulling back on online retail purchases. Auto sales as well saw a 1.9% decline. So if you exclude gasoline sales from that retail and restaurant spending number, it actually fell by 0.3% month over month. So overall, it looks like a good number, but in reality, we are starting to see what we would expect. People are pulling back on these expenditures which aren't necessary because they have to spend more on necessary expenditures, whether that be electricity, whether it be gasoline and other items, and food, of course. What else we're seeing is American credit card spending is up. So Americans are piling on more debt. We just got earnings from some of the major banks, Citigroup, JP Morgan, and Wells Fargo, and all three reported that spending on credit cards were up. I think Citi had their number. Spending was up 23% year over year. JP Morgan, it was up 29%. And at the top, Wells Fargo credit card spending was up 33% for their consumers. So we're starting to see consumers put more on credit cards and spend more. Overall, there's positive aspects of that, but too much debt is a very bad thing. So I think it's something to keep a close eye on, as it continues to evolve.
Yeah, so inflation and higher prices crowds out other spending, reorder spending, so it changes the economy in many ways that are negative. So eventually it could lead to recession if we don't solve this quickly. So that's why it's really important that disinflation come in, Chris, right?
Yeah, I mean, that's obviously the Fed is shooting for disinflation would be the exact term that the Fed wants, right? They want to bring that number back down to that 2% number. I think it will happen. I don't know if they'll ever get back to that 2% number in the short term, but I think if they can, in their mind, if they can get it between 2 and 4, maybe even 5%, something that's manageable, an amount of inflation is definitely necessary and good for the economy. And people would argue 2% is too low. I mean, I think in that 2 to 5% range, people would argue, or to even 2 to 4, that's decent inflation, and that could be good for the economy.
Yeah, it's a normal, healthy thing. Of course, we all remember our grandparents saying that they could buy, gas for a nickel a gallon and things like that, and bemoaning the old days. But again, normal inflation is part of a normal economy. So I'm sure that our grandchildren and great grandchildren will say the same thing about, oh, I remember when Bitcoin was only at 40,000 a unit, that kind of thing. So, so things have changed a lot. So great. Anything else on the economy, Chris?
No, that at least the domestic economy. That's all I had number wise from the domestic economy.
Okay, well, good. Well, lots of other changes in the economy are happening, and there is a little mini surge in certain countries on COVID again. Although interestingly enough, the mask mandates were overturned today by a federal judge for the airline industry and for the transportation industry. There was not enough justification for it, and the legislature has to make those rules. So the CDC got overturned by a federal judge. So just today, everybody's lifting their masks and throwing their masks out the window or whatever else they're doing, and with sheer joy. So that's good. Now, China, on the other hand, is in total lockdown right now, and I guess that's again a big difference between American society with freedoms and the Chinese society, where they're total control. They can turn, as you had mentioned, Chris, the entire city into a gulag and lock down everything. It's really a shame. But maybe some folks have seen those videos of late at night where they have all the lights on in Beijing, but they hear all the screams from people in their apartment yearning to get out, and people are screaming. It's really quite sad, unfortunately. And they also had been separating kids from their parents. And then, of course, they put some of those folks back together. But they've also had drones overhead in China telling people that their freedom doesn't matter and they must lock down going forward for a zero COVID policy. So it's been pretty bad over there, really bad, Chris.
Yeah, I mean, I'm not necessarily a health professional, if you will, but it's interesting to see. I mean, I think we were talking about this a little bit earlier, Brian, that, if you flipped it kind of towards the very beginning, first 6 months to a year of the pandemic, it was almost reversed, where you had America really kind of struggling to grasp it. You had a lot of lockdowns, restaurants closures, things like that. Not as significant as China, just because America is, like you said, Brian, very different. They're very totalitarian. They're going to lock down. But you almost seen it flip. So you saw it flip here. In the beginning, you had China they kind of crushed it, the virus really quick, and they kind of opened everything up. In America, we just kind of slagged through it, and it was just really tough. Now it's going to come back and hit China again. And I think it's really interesting to note, because I think in America, for most of the world, a lot of people got COVID. They either got COVID or they got the shots, the vaccines. So a lot of people got exposure to it one way or the other for the most part, built up the antibodies. A lot of people got it without even knowing. So I feel like now we're getting a lot more strands are a lot more viral, and we're seeing that play out in in America right now. I think it's strand B02 or something, I think is the latest one that it's definitely going through the population, but it I think, showing as a cold, very mild. Most people don't even know they have it. So, which is the ideal. This is an endemic disease. So, whereas China, since they didn't get those immunities or had very little exposure, I think they're bearing more of the brunt of it. So, it'll be interesting. I know just earlier this week, I think China's economic numbers came out and they grew at 4.8% in Q1, which blew away expectations. But it'll be a lot more challenging to keep that momentum going into Q2 with these lockdowns. I mean, you're talking, tens to 20 million people being locked down in cities all over the country. I mean, it's pretty significant. So it's going to be hard to repeat that number. And any number we really get from China, obviously, we take with a grain of salt as well.
Well, and anyone who's a China watcher remembers how they reported a 6% growth every quarter, no matter what. And then they saw it break to 5. Now they're at 4.8. But, the reality is they've shut down 70% of their economy. And when we shut down 40% of our economy in the second quarter of 2020, we saw a negative 32% quarter, negative 32. So I'm not sure how they're at 4.8 when they shut down 70% of their economy. So as Chris said, sometimes the numbers out of China are not believable. And I kind of consider those to be probably not believable either. But nonetheless, they run things the way they do. And there's a big distrust in government in China, but they have total control. But that's also happening here. Now, a lot of this doesn't affect the economy necessarily, but it could over time, depending on how the government uses its power. But there's a big distrust. 2 defendants in Michigan were acquitted of the trying to kidnap Governor Whitmer. It turns out the FBI was involved in it, and also turns out the FBI was involved in January 6th, the storming of the Capitol, and they were kind of spiking it and causing it to happen. So, many of these things are not necessarily economic, but if the government keeps pushing certain narratives, it could affect the economy. And so that's why we watch it here on the 4-Star podcast. But there's plenty of political shows where you can learn more about those things if you'd like. We just hope that it doesn't lead to major distrust of government, and then the whole economy seizes up if people don't trust the referee. The government is the referee in our business environment and needs to be a fair arbiter and not take sides and not have positions like that. But Chris, we did see a big move for free speech by Elon Musk, right?
Yeah. I think we talked about this, but it was kind of just breaking on the last podcast that Elon Musk did a large purchase of Twitter, some Twitter shares, and they asked him originally to join the board. Elon Musk looked like he was originally going to take it, but I think what he ran into is he likes to obviously be very provocative on the platform and joke, and he's looking for a significant amount of change in the platform as well from a free speech standpoint, like you mentioned, Brian. And I think he realized if he took a board seat, he was not going to be able to really enact that change, and he would really just be kind of handcuffed within the Twitter board. So he declined the board seat in actuality, and then he kind of essentially made a bid for a full takeover. I think it was like $52 a share, if I remember correctly.
43.
Was it 43? $43 a share. So he made a bid for the entire company to purchase it. Right now, Twitter's board is actually fighting it. So they enacted what's known as a poison pill provision. And essentially what that means is if Elon Musk decides to do a hostile takeover, starts trying to aggressively purchase shares just in the general market, once he reaches a certain threshold, I think it's around 20, I think it's less than 20%, let's call it 17%. Once it hits a certain threshold, they will actually release new shares at a much lower price to current shareholders. So the goal of a poison pill provision is to dilute Elon Musk's shares. So it's really hard for him to get majority ownership, because every time he buys a big chunk, it just gets diluted back down. So we'll see. I mean, I don't know if they're outright just going to rebuff him or if they'll come back with a certain price. Who knows? But it's certainly interesting to see. And I think on that note, too, I think it just came out today, Blackstone, which is another large financials company, they agreed to buy student housing owner American Campus Communities. And this deal, massive deal, $12.8 billion. So it's really interesting. We're starting to see companies, I think, really start to take a positioning and posturing coming out of the pandemic. And they're looking to benefit from the fact that really there's been relatively low, if any at all, new student housing. I think everyone knows a lot of campuses have either gone Zoom over the last 2.5 years, done Zoom classes, haven't been very much in person, so they haven't really had a need for any new student housing. So there's a shortage there on top of the national housing shortage. So Blackstone's making a play to hopefully, in their mind, collect very high rents for the student housing market.
Yes. So, Chris, back to your comments about Elon Musk. Even Jack Dorsey, now the founder of Twitter, who has also been known to be someone who had been censoring different groups of people under some sort of model where they thought that they were trying to keep bad things from happening on Twitter. But everyone kind of felt they crossed the line. Now, even Jack Dorsey is supporting Elon Musk. And some of the old timers listening to this today may be smiling when we talk about poison pills, because that's an old technique that was done in the 80s by people like Ivan Boesky, and anyone remembers the RJR Nabisco acquisition in 1990, way back. So, eventually most of those poison pills, got realized where the company had to do the best thing for the shareholders and not dilute shareholder value, which is what a poison pill is. And they eventually did find some sort of negotiated way to sell to a person willing to make a bid for a company at a significantly higher price. They have a fiduciary obligation to the shareholders to get them the best price. So right now, Elon Musk has the best price. Now there's rumors someone else may come in, but Elon Musk has even said he's not even worried about the economics of Twitter. He wants Twitter to be a free speech outlet. So he's probably willing to bid more. If somebody else tries to outbid him, he'll bid more, I bet. So we'll see how this plays out. It's again, for those who have been around for a while, and they remember the Ivan Boesky and all the corporate raiders and boy, there are 3 or 4 of them. I can't even remember anymore. But that was a big thing in the 1980s. And then, Chris, your comment about student housing, all this campus is closed. So some student housing companies went bankrupt, actually, because they had debt and they couldn't support their firms, and there was no PP program for them, or didn't seem to be much. So what a strategic buy, though, for Blackstone, isn't it, to buy in student housing, right? Hopefully near the bottom.
Yeah, no, I mean, I think that it's an interesting play on their standpoint, and I think it's positive in regards to the fact that they're obviously putting significant financial investment in this, that they believe that this pandemic, for the most part, is over, that we're going back to a state of normalcy for the foreseeable future, for at least from the pandemic standpoint. So, I think it's positive from the overall outlook.
Yes. So the bottom line, to kind of recap for today, we do see risks of recession here. And if the Federal Reserve chooses to raise interest rates very, very quickly to ward off inflation, they could go possibly too fast and cause a recession. There are other factors, of course, that could cause a recession as well. Or maybe the Fed will raise rates and the economy absorbs those rates, brings inflation back down, and we don't fall into recession. So there's a number of ways this could play out, and we're just going to keep watching and reporting in here on the 4-Star Today's Market Explained podcast, Chris. Anything else you think we should share with the group today?
No, that's it. I think that about covers it. It's a good catch-up market overview.
Well, good. Well, we'll leave it there. A couple housekeeping items. We do blog posts on the 4-Star website. There are 4 mini sites. Yours truly, Brian Castle. I have the Leadership Matrix site, and we had a really interesting set of blog posts since our last 4-Star podcast. One was about the time that we were forced to rent an electric car because there were no cars available at Hertz, Dollar, or Thrifty. And we spawned a blog post called America's New Pastime or a Royal Waste of Time. And I was thinking more like the latter, actually, because I was sitting at a Wawa station somewhere outside of the Philadelphia airport for an hour with Jack, trying to figure out how long is this thing going to take to charge? And so a lot of business folks and others have not really thought about, gee, if I get an electric car, when am I going to fit in the time to charge this thing? Unless, of course, you charge it at night, which that sounds like the best way to do it. But nonetheless, we were thinking about all the possibilities of maybe they could serve food, or maybe they could, have shows or play movies or something while you're sitting at the gas station and getting your electric charge done. But anyway, that was one that struck a nerve with a lot of people. So it's on the 4-Star website. The blog post is called America's New National Pastime, or Royal Waste of Time. And then recently we put out one about the incredible shrinking oil industry, as the current administration is spending a lot of time trying to forcibly shift people to electric energy, which is a good, clean energy, but yet it's hurting the oil industry pretty quickly. And so we wrote a piece about that, about how the oil industry is shrinking and how quickly it's shrinking. And then one more piece came out about a better means of tax collection. And it's partly driven by the fact that we have really now come to very high taxes in America in many states. We also have lots of services. Some think we're becoming a socialist state like Europe, where there's been very little private sector growth in the last 30 or 40 years. So we're suggesting a number of articles there that talk about better means of tax collection. So maybe we do value-added taxes and other user taxes rather than just income taxes and things like that. So that's out there also on that Leadership Matrix podcast. And we have one coming up here over the weekend, Chris, about, is the market efficient? They often talk about the market efficiency theories, and the market's always efficient, right? But maybe it's not. And there's some discussion there about how the market is efficient and sometimes how it's not really efficient. And there's anomalies that you can take advantage of. So, Chris, the other thing is, I think many of our listeners are aware that the video of us taping these podcasts and all the other interviews are also available on LinkedIn, Instagram, TikTok as well. So people used to think TikTok was just for young girls dancing, or many people in China or something like that. But TikTok is now available for business people as well. So the 4-Star clips are out on TikTok. And so be sure to have a look at TikTok under Today's Market Explained, and you'll be able to see us make some of these provocative statements that we're making here in the podcast, now also in video form. So don't forget about TikTok. And then also one interesting interview that's coming in a 4-Star podcast with also video clips coming is Catherine Von Berg, who is an expert in energy storage and battery storage. And that's really what Tesla is all about. Tesla is like the biggest electric car company now. All the big car companies, Chris, as you know, are going into electric, hybrid, combined gas and then electric power, or just pure electric cars. And so battery storage is going to become really the hottest item to think about. And Catherine Von Berg is an expert in that area, and she comes on to tell us a little bit about what's going on in that area. So a lot to look forward to. Chris, anything else we should share? I think we were done, right?
Yeah, I think that covers it.
Well, for Chris Reardon, for the whole great 4-Star staff, we want to thank everybody for being with us today on the 4-Star podcast. And we will be back again with a Catherine Von Berg interview, and then another episode very soon where we talk about the markets from today forward. So thanks again, everybody, for being with us today.